There's one scalping strategy that I use every day that is simple, repeatable, and after 6 years of trading is the biggest factor why I became a profitable day trader. In this video, I'm going to share the strategy as well as 3 simple steps that actually help me execute this strategy every single day in the real markets. Using this strategy, I was able to get max allocation at various different companies and pull payouts like these on a week-to-week basis before moving into my live account where I was able to pull 5-figure months consistently after scaling my prop firm accounts. The thing about this strategy is that it's not limited to any specific style of trading. Whether you're swing trading or scalping, you'll be able to take advantage of this 3-candle strategy to get max allocation funded and also scale your live account. That's because this strategy actually helped me understand the markets, but that's not going to get you funded. You're going to have to go out there yourself, learn the strategy, and then go apply it on different companies which have different rules, and then eventually use it on your live capital to scale it up and get 5-figure payouts. The goal of today's video is going to be to learn this one simple and proven strategy that I used to trade about 90 minutes. Now it's a 3-candle strategy, but we're going to be using the 30-minute time frame, so it's going to take about 90 minutes for this trade to play out. But the good thing is that it doesn't require any indicators, no daily bias, and no confusion because it's simple, repeatable, and rules based. So if you do get the rules for the strategy, you can execute on it. And if you don't get the rules, you're waiting for the opportunity when you do. This already is going to help a lot of traders who struggle with overtrading, struggle with finding a profitable model that isn't just sitting on the 1-minute time frame and looking for every market structure shift. This strategy requires a certain set of rules, and it's the reason why it made me profitable, because a lot of the mistakes that traders make are simply because they can't scale out of the 1-minute time frame. Now, this is a scalping strategy, but it takes about 90 minutes to play out. To explain the strategy, I'm first going to cover the 3 simple steps that I actually use to enter the strategy. So mainly the entry criteria, what actually composes of the strategy, and actually understand the direction of the strategy in the specific day that you're trading. The second thing that I'm going to be covering in this video is going to be the stop loss and profit depending on where your entry is at and different examples of this strategy. And that means that you're going to have to look at some examples of real-time execution. So this is going to be one of the most important parts of this video because it's going to show you how I actually adapt to this strategy to different scenarios in the market. Because while the strategy composes of the same exact 3 simple steps to actually enter your trade, the market's going to be different every single day. So you're going to have to learn how to adapt the strategy to different trading conditions. The problem is that 90% of traders focus on range. So they're looking to buy the lows or sell the highs of this daily range. You can see here that the daily candle opened around here and it closes right around here. And traders focus on the range. Like you could have tried to sell the resistance or do a support and resistance, or you could have traded the breakout towards the supply. There's so much opportunities for you to have executed a trade, but in reality, this is all noise and it's not something that you can repeat. While this may have happened in this specific daily range, this isn't something that you can necessarily come into every single day looking for and repeat this process. The 3-candle rule involves a gap that forms between 3 candles. So as long as the wick on the 3rd candle does not overlap with the wick on the 1st candle, you will have a successful 3-candle rule model, which means that a gap forms between the candles. And when you have these 3 candles right here that form this gap, you can use this gap to trade the direction. As I mentioned, most traders focus on the range. When you focus on the 3-candle rule, you're able to tell which direction of the range the market is actually heading in. Because a big factor of not being able to trade the range properly is not being able to identify whether it's going to the support or the resistance of a range first. So if you can't identify the support or resistance first and you try trading from the middle, you're going to catch a loss if you're aiming for the resistance when in reality it's going to run to the support first before the resistance. So one of your biggest focuses should be to master this 3-candle rule. You have to get 3 candles. It does not matter whether the candles are bearish or bullish, as long as the wick on the highest candle does not overlap with the wick on the lowest candle. So here I have a bullish example of this 3-candle rule where the wicks do not overlap and we have a bullish gap that forms right in between these 3 candles. And here we have a 3-candle rule where there is a bearish candle in the middle, which makes it a bearish 3-candle rule to push price lower. Now you're probably wondering, what scenarios does the 3-candle rule not apply to? And here are 3 different scenarios. The first one is if it's ranging. Because if it's ranging, the middle candle will never have enough volatility to make a gap in between 3 candles. The second one is we do have a big bearish candle. However, the 3rd candle wick comes up to rebalance the previous candle. So this 3 candle rule would not have given you the entry that you were looking for. However, this is another very powerful concept that I'm going to be covering in another video. This right here is another example where the third candle wick is very massive and it completely overlaps with the first candle wick. In every single one of these scenarios, you would not have a 3 candle rule that you would be able to trade inside of a range. Just a correction on what I said earlier, I said that the 3 candle rule does not apply inside of a range, but I meant to say a consolidation range where the candles are moving sideways, because this right here is a good example of a range that has expansion moves, and the candles are actually expanding inside of the daily range. So it's not just a consolidation range. It only does not apply when there is simply no gap in between the 3 candles. So how can we actually execute on this 3 candle rule? And here I'm going to show you a real market example that I actually traded. And as I mentioned, I don't trade London or New York session with this 3 candle rule. The reason why I like to trade Asia is because it's the first session of the day and we can catch the entire expansion of the day. So how could you have captured this 3 candle rule in this specific range? As I mentioned, we can't just predict that it's going to turn around. However, if you know the 3 candle rule, then you can predict that it's going to likely run towards the bearish direction instead of the bullish one. And all you have to do is look for confirmation. So here you can see the 3 candle rule. We have 3 candles. 1, 2, 3. We formed a gap in between these candles. And you can see what happens next is price then decides to come down below this gap, close below. And the moment that it closes below this gap, that's an instant sign that the market's going to run towards sell side. Not only did it respect it once here, but it also came back in a second time before running on the low. First, we stopped at this resistance right here, then we came back up into this 3 candle rule and then expanded to the next level of resistance, taking out this low before moving higher. That is the 3 candle rule. Here's another example of this 3 candle rule. We could have either used the 3 candle rule that got disrespected, or we could have used the 3 candle rule that was still respected, the bearish 3 candle rule. You can see 1, 2, 3, and the wicks do not overlap right here, so we get a gap. Both of these gaps are respected, and this was an extra strong zone because we had both a bullish 3 candle rule and a bearish 3 candle rule here that allowed us to execute on the trade. Now, I want you also to understand how the daily candle works. So the reason why the 3 candle rule works so well is because once the daily candle begins to expand, the 3 candle rule is just creating the wick above the open of the daily candle. You can see here we have the open, and when we run up to create the 3 candle rule, we're creating the wick of the daily candle that actually wants to expand towards sell side. So here, once we come back below it, we get that 3 candle rule, we close below the 3 candle rule, and now we know that the market's likely to head for the nearest support instead of running higher. So all that we're doing is letting the 3 candle rule play out, which takes about 90 minutes because we're using the 30-minute time frame. And once you get that entry, that's when you know that you can catch the expansion towards either the nearest low here, and then if you saw that it came back up and respected it once more, which means that the candles are stopping right here. You can see that the candles do not want to push any higher than this 3 candle rule. These gaps are very powerful, and especially this gap right here, because there was both a bullish and a bearish 3 candle rule. So now we know that it's likely to run on the major level of support right there, and that's exactly what happened before the market ran up higher. And when it was down here, you can see that from Asia session, using the 3 candle rule, we managed to catch the expansion of the entire daily candle. The next section of the video that I promised to cover for you guys was your entry, your stop placement, and your take profit. So where are you going to optimally get in your entries for this model? Where should you place your stop depending on where you got in your entry? And then what should you aim for in this model? The chart below is a real market example of the 3 candle rule, and there's actually 2 good examples of the 3 candle rule at play. So I'm going to give you 5 seconds to try to find it yourself here. So 5, 4, 3, 2, 1. If you noticed, we had a 3 candle rule right here where we have a bearish move right here, and then the next 3 candles that followed up here gave us confirmation into this 3 candle rule. Then we also have a 3 candle rule right here, 1, 2, 3 candles, and you can see here that the wicks do not overlap here. And once the market ran up with the next candle right here closing above, the next 2 candles respected it right here. This one came in, closed inside of the 3 candle rule gap, and then it expanded. However, this first move failed to take out the high, and what happened as a result of it failing to take out the high is that we got relative equal highs. So the second time that we started running and got another 3 candle rule, this is the one that we're optimally hoping to take. And you can see here that once we closed above, we came back and tapped into this gap right here with this candle. That's where you would have gotten in your entry. So here you have an entry into the 3 candle rule. The take profit in this specific entry is going to be very easy because we have relative equal highs. So our first take profit is going to be taking out this liquidity. We're going to expect it to run 10, 20 pips higher than this, and that's a good area where we can exit. If we have a higher target, like a higher time frame gap that we're aiming for, then that would be the second area where we might take partials or exit our complete position from. Now, where would you place your stop loss if the 3-candle rule only gave you an entry at the very top of a pretty big gap? One of the potential stop placements that you might have had for an entry like this, where it just barely taps the top of a pretty big gap, would have been at the low of the lowest candle inside of the 3-candle rule. Now, the reason why is because gaps act as magnets. So it might have only tapped into it right here, but there is a potential that it can dig through, and I'll go all the way into the gap to fill it up before going higher. Since gaps act as magnets, it wouldn't be an A+ setup for you to just take an entry right here and not factor in for the fact that that might happen. Now, in extreme bullish conditions, and you will be fine placing a tight stop loss around the midpoint of the gap or below the gap, but in optimal circumstances, you want to have your stop loss below the low of the lowest candle in the 3-candle range. This is because the gaps, once again, they act as magnets, and in an A+ setup, you want to make sure that it fills up the gap completely before running higher towards the narrative. Now, our take profit's simple right here, and I already covered that. We're just going to aim for the equal highs here. Our stop placements vary depending on the conditions of the market and how far it actually dug into the 3-candle rule gap. We could have dug into the midpoint. We could have dug into and filled the complete gap, and that will highly affect the RR that you're going in on this trade with. So you kind of want to adapt and learn. If it fills the midpoint, you only really have to put your stop loss below the gap. If it's just at the top and runs higher, you can put your stop loss at the midpoint depending on bullish market conditions, or you want to secure your stop loss underneath the lowest candle of the 3-candle rule strategy. And that about summarizes it. It's about the same for a bearish scenario. You would just be looking at bullish candles and then wait for them to come down below and disrespect the bullish one. So you'd put your stop loss above the highest candle of the 3-candle rule strategy. If you have a clear swing low like we do in this example, then that's a great spot to put your stop loss, especially considering the fact that we got a higher low right here, which is clear indication that price wanted to run higher. Thank you all for getting through this video, and I just wanted to give you guys a recap of what we covered so far. So remember, in simple terms, the 3-candle strategy is based on 3 candles. And if the wicks of the bottom and the top candle do not overlap, you get a gap in between these 3 candles. This gap is the most important thing, and once it actually comes back into it, you will know the direction of whether it's heading towards the nearest resistance or the nearest support based on whether it closes above, below, or inside the gap. This will tell you exactly where it's heading, and depending on where it closes and where you're actually able to get an entry, that's where you place your stop loss and profit depending on what you have. If you have equal highs somewhere up here, then you can aim for those equal highs in the 3-candle rule strategy. If you have equal lows and it closes below, then you're going to be aiming for the equal lows. If you have a higher time frame gap that you're aiming for, then you use the 3-candle rule to get yourself to that higher time frame gap. And the most important thing in this strategy is just making sure that you actually practice it. Real-time executions are going to be your path to success using this 3-candle rule strategy. Again, if you enjoyed this video and you learned something new, drop it in the comments. And if you want to get a PDF because it's going to be more helpful for your learning, click the link below. I have a Telegram where I send out my weekly analysis. I have an Instagram page where I post regular updates and I post my trade executions on there. And be sure you sub to this channel because I upload 2 videos just like this one every single week. Thank you all for getting through this video, and I'll catch you guys in the next one.